What's going on, guys? Welcome back to the channel. Economic Prepper here. So the US real estate market is in big trouble, at least according to a handful of, probably more than a handful of economists, real estate agents, real estate brokers, property managers, Redfin, and even Zillow. We're out here in Florida, and we are actually on the market. We're in the real estate market right now, looking at properties. In fact, we have already started our search. Now, we do know that interest rates are at recent term, they're at highs. They're at the highs, right? But realistically, if you look back over the last 15, 20 years, if you go back even further, we're still relatively low. We're still fairly low in terms of the historic rates for mortgages, 30-year fixed rate mortgages. Now, the thing is some of the properties we've been looking at here lately, these prices are still high. And they've told us that these real estate prices are going to be coming down. We're going to be seeing one of the biggest housing market crashes and collapses in recent modern history. Well, folks, we haven't seen it yet. In fact, the affordable housing in the area, in my opinion, is getting further and further from being affordable. We're looking at a 3-bedroom, 3-bath condominium. This particular condominium was built back in 2004. So it's nearly 20 years old. And the asking price on it was $2 million. To be more specific, it was $2.1 million. They were asking $2,100,000 for this 3-bedroom, 3-bath condominium with, there's some nice amenities to this particular condominium. I think it provides you with 1 or 2 parking spaces. But at the end of the day, this particular condominium only had barely 2,000 square feet. So at barely 2,000 square feet, they were asking $2.1 million. Now, I don't know if I would put that in the category of affordable housing at all. Now, the other thing is that was very interesting. This particular property was listed numerous times on the real estate, on the MLS, on Zillow, on Realtor.com, all your favorite real estate websites, TrueFin, Redfin. It was listed previously and sold in 2019 for $1,300,000, $1,323,000, if I'm not mistaken. So, between 2019 and 2022, that's 3 years, this property is being listed at almost $800,000 more than the previous sale price. Now, you might be asking yourself, well, hey, maybe they made significant improvements. Yeah, there's been real estate appreciation, since the pandemic. There's scarcity. There's a housing market shortage. There's all of these different factors that come into play when evaluating the current value of real estate and why prices may have been going up. But the simple fact of the matter is that I've actually looked at the listing. The previous listing from back in 2019, when the house last sold at $800,000 less than what it's currently on the market for. So back in 2019, this particular house sold for $1.3 million. And when you look at those photos, you can clearly see that there are no evident improvements made to the property. So this leads me to believe that someone bought this piece of property, whether it was an entrepreneur, real estate investor, or just someone who decided to go ahead and purchase this piece of property, maybe as a single family resident, perhaps it was, I don't know the reason behind the initial 2019 purchase. All I know is that it is clear that there were no visible improvements on this property to justify why it might have gone up $800,000, which, by the way, is roughly 37% of an increase in a matter of 3 years. Now, in addition to that, I've actually been looking at the history of this listing. It was listed numerous times, and it evidently has a very difficult time selling. Because if you look at the number of times this particular property was listed, taken off the market, relisted, taken off the market, relisted, taken off the market. These people are, whoever owns this property is having a very difficult time getting it sold, getting it moved. So, simple fact of the matter is this. This property has been listed once again on the market, and it's been on the market for, let's just say, the past 7 or 8 days. So now, if you're a real estate agent, let me ask you something. If you received an offer for this particular property, and I know you're asking $2.1 million, but let's just say someone wanted to entertain potentially investing or purchasing this property, and someone offered you, let's just say, $1.3 million for it, $1.4 million for it. Number one, would you be offended by this particular offer, or would you just be happy that you're getting any type of activity on the listing? Because in this housing market, a lot of people they're sitting on the sidelines. They're expecting this housing market to crash. They're expecting the Fed Chair Jerome Powell to come on in and crash this entire economy. And if that were to happen, and we see massive layoffs, and then suddenly a flood of homeowners interested in selling their properties all of a sudden decide to go ahead and list their properties all at once, right? Then whatever strength the buyer had in this market will be completely gone, obliterated. And we're already headed toward a seller's market. Many people will say that we're already in a seller's market right now. But what would happen if we just all of a sudden just saw a massive flood of residential properties hitting the MLS, hitting the FMLS all at once? And on top of that, the Fed has not pivoted from their economic plans to rein in inflation in this economy. So, if we were to say, if we were to see the Fed continue to raise interest rates, I think that the next Fed FOMC meeting is scheduled for probably less than 3 weeks now. If the Fed were to come out and say, hey, we're going to raise interest rates another half a point, 50 basis points. If the Fed were to come out and say, hey, we're going to raise interest rates another 25 basis points, what will happen at that point? Well, number one, chances are we would likely see another jump in mortgage rates, because even if the Fed were to raise interest rates at a slower clip, this is still raising the short-term borrowing rate, which banks are charging each other to borrow money. So this would likely cause mortgage rates to increase even higher. And let's not even get into how much the banks are hurting right now. The banks aren't closing deals, not at the rate that they were 12 months ago. The banks aren't earning these closing related commissions and forms of revenue to the extent that they once were. So this is a very, very interesting dynamic at this point. So you have to ask yourself, is now the time to buy? Is now the time to sell everything, take whatever you can get, wait for the implosion, and then buy back into the market? I'd love to hear from you guys. Drop me some comments down below. Let me know what you guys are thinking. If you like this video, drop a like, consider subscribing, and let me know if you want me to give you a tour of this property that I'm talking about. I'll see you guys on the next one. Be safe.